Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, yesterday we saw a lot of strength in the market, but today it was a clear reversal. We saw the Nifty, in fact, slip below that 24,600 mark intraday, but we ended just around the 24,650 mark, given the fact that the last half an hour we did see the markets trimming some of these losses. I just want to point out that globally markets have done fairly well today, given the fact that we saw Asia, most of the Asian markets ending the day in the green, European markets starting out in the green as well. And of course, the US futures also trading fairly positive, after a very strong session overnight. So it was an India specific issue today, which is why we ended lower by about somewhere around 0.3% on the index, and even the broader end of the market saw almost 0.5% cut, given the fact that there's renewed tariff threat coming in from Trump overnight. Of course, he said that nations that are importing oil from Russia will face higher tariffs. So these renewed fears have once again soured sentiment on the Wall Street, which is why we saw stocks basically reversing the upbeat mood that we had, that we saw yesterday. In fact, we did kick off the week on a very strong note, but fizzled out. Bulls really didn't end up kind of holding on to that or extending those gains that we saw yesterday. But in terms of the broader end of the markets, mid-cap index, as I mentioned, ended lower by about 0.4%. The market breadth was weak. It started out pretty strong, but then it tilted in favor of laggards, and in the end we had 2:3. That was the NSE advanced decline ratio. The Nifty Bank index as well, mind you, ended lower by about almost 0.5% or thereabouts, given the fact there is a fair bit of caution ahead of the RBI policy decision that will be announced tomorrow morning at 10 a.m. So ahead of that, some bit of jitters. Of course, street is very divided this time around whether or not the RBI will again dole out a 25 basis point rate cut, or will it be a dovish pause. But the sense we get from experts is that it's going to be more about the governor's language and tone and less about the cut. Of course, we did see the RBI front loading interest rate cuts. Last time, June policy, we saw 50 basis point rate cut, but let's see what happens tomorrow. The street is fairly divided with 50% expecting a 25 basis point rate cut and 50% tilted towards more of a dovish pause from the governor. But inflation and GDP forecasts may be cut. That's another thing that the street will be watching out for. Barring autos and pharma, all of the, I beg your pardon, barring autos and metals, all the indices ended in the red. The Nifty Pharma Index in particular extended its fall for a fifth straight day. In terms of gainers, Titan was of course among the gainers, reports numbers this week. IndusInd Bank, after the appointment of MD and CEO Rajiv Anand, that stock was among the top gainers. Maruti, SBI Life, Coal India, these were among the gainers. On the flip side, Adani Ports reported numbers, post numbers. Of course, the stock dipped, and we saw that emerging as a top Nifty laggard. Reliance Industries out of favor today. Infosys, Adani Enterprises, ICICI Bank among the laggards. And in terms of the mid-cap universe, you had quite a few movers. Newgen software, that stock was up I think in excess of 10%. Tanla Platforms, Godfrey Phillips, that stock smoking hot. We saw an 8 to 9% rally coming in. The stock in fact hit a fresh 52-week high in today's session. On the flip side, Triveni Turbine, on the back of poor numbers, stock lost somewhere around 10%. Reliance Power, even BSC and other capital market plays were under pressure. But let me just sum up why BSC is under pressure. There's been some development, according to sources. The finance ministry may be in talks with market regulator SEBI to curb options market speculations. Now, finance ministry and SEBI have been discussing ways in which options market volumes can be trimmed and cash market volumes can be increased. Now, sources say that the government thinks weekly expiry is not being used for hedging, but only being used for speculation. I think post this, we saw BSC take a tumble, and that's why the stock was down somewhere around 5%. But let's understand the situation when it comes to the benchmark indices and how the setup is looking like for the rest of the week. Joining me is Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Jay, lovely chatting with you. Yesterday it looked like it was a decisive up move, but not to be. It kind of fizzled out, although we've managed to defend 24,650 almost. What is your sense? Do you think yesterday's up move was just a one-day wonder like we saw last week in the middle of the week sometime?
Afternoon to you, Nandita, and thanks for having me again on your show. Well, as far as the Nifty is concerned, I would say yes. This bounce as of now seems a technical bounce back or a dead cat bounce is what we say, Nandita, right? And see, we have seen a fall coming in Nifty from approximately 25,700. And it's been consecutive 5 weeks, Nandita, that we have seen Nifty, in fact, losing in a negative territory. I'm talking about until last Friday. I've checked the data of Nifty right from the inception of Nifty till last Friday. I mean, apart from 2001 and 2008, I mean, these were the only two occasions wherein we saw Nifty closing in the negative territory for more than 5 weeks. Else, and
Hmm.
those 2 years were the bear markets, right? IT bubble and financial crisis. Apart from that, we haven't seen Nifty closing in the negative territory for more than 5 consecutive weeks. So this is the sixth week.
Hmm.
Looking at this observation, Nandita, it seems that it appears this might turn out to be a positive week. For that, I would say the reversal would be 24,450 to 24,500, the recent lows. Until those lows are held, you may see that bounce back coming till 24,850, or maybe it can inch towards 24,950, 25,000, which is the previous weekly swing high. So that's the typical 500 points range which I'm eyeing for. See, the IVs are still low. And we have discussed about the IVs. I've discussed with
Hmm.
you that, Nandita, IVs are low and there can be some bounce in IVs. It can lead to a pressure in markets. And we've seen the pressure in markets and a bit jump in the IVs. But still the IVs have not completely, reversed. So that is yet to happen. And the volatility is likely to stay in the markets. And if that stays in market, Nandita, so that means the bounce, whichever it comes, as your question was, that will it be just a short-lived bounce? I think yes. It would be a short-lived bounce as of now, looking at the IVs. But looking at the weekly data, a bounce is also
Hmm.
very much possible. So short-term trend could be up, but the medium-term trend could be sideways to negative.
Okay, that's the view. Short term, you could expect a bounce, but medium term, things are looking not that pretty at this juncture. But what about Nifty Bank? The bank index has underperformed the benchmark indices if you look at the last couple of sessions. In fact, last
Yes.
have the RBI policy outcome as well. What is the positioning looking like when it comes to Nifty Bank? Is the setup looking better than the benchmark, or is it looking far worse?
I think the underperformance of bank would continue. Nandita, in this fall. See, one thing is what we also observed is when you look at the Nifty Bank and Nifty IT ratio. I mean, so far we have seen that Nifty Bank was outperforming Nifty IT in the fall. Wherein the last fall was more of because of IT. So last fall which we had seen on Nifty, which wherein we saw Nifty falling until 21,750 approximately. That was mainly led by Nifty IT. Thereafter, the bounce which had come in April, May, June, Nandita, those, or maybe from March. So those 3 4 months of bounce within which initially Nifty IT, I would say, outperform the Bank Nifty, and at the end, the Bank Nifty outperforms. So with this Nifty
Okay, I think there's some kind of a network issue at your end, Jay. Let's try and fix that because I couldn't get what you just said. Jay, we'll just try and fix up your network issue, but we will get Jay back. But let's take a look at some of the stocks that were actually hogging the limelight today. And Godfrey Phillips is one stock that deserves mention. Not just good performance, the company also announced. A bonus issue in the ratio of 2:1, which of course led to very strong gains on the stock of Godfrey Phillips. The stock hit a fresh 52-week high. In fact, in the last 6 months, if you see the returns, it has been over 100%, 110% or so on that particular stock. So yes, Godfrey Phillips, we'll touch base with Jay and ask him whether or not one should really ride this momentum, or is it close to topping out or not. But yes, Godfrey Phillips, one of the top performers on the Nifty 500 index, and clearly a smoking hot rally coming in on this cigarette maker. On the other hand, you also had Sanofi Consumer. That stock was also up after good numbers. It managed to break out of a 4-day losing streak on the back of strong earnings. The second quarter revenue surged over 28% on export growth and new launches. So yes, that was another stock that was in focus. Of course, good numbers and great up move coming in on that particular stock as well. But we also had some of these names like BHEL and Suzlon. They were also gaining in trade, given the fact that UBS has initiated coverage on some of these names. But yes, we'll come to that. But Jay, I was talking about Godfrey Phillips. In fact, let's finish your answer on Nifty Bank as well. We couldn't get half of the things that you said. So if you could repeat the setup on the Nifty Bank index, and will the underperformance continue?
Yeah, so what I was trying to say, Nandita, I'll quickly narrate that again, is that the last fall in Nifty earlier this year was due to Nifty IT, wherein Nifty IT underperformed the bank. So bank was relatively outperforming there. Then we did see most of the sectors bottomed somewhere around in March, and therein at the start Nifty IT outperformed the Nifty Bank, and at the end Nifty Bank again outperformed the Nifty IT. In the recent fall, Nifty Bank was outperforming the Nifty IT. So what I'm trying to say is that generally there is a shift in the performance or the contribution of these two sectors in the Nifty. Sometimes it's that Nifty Bank is that supports the Nifty, or helps the Nifty, and sometimes at Nifty IT. It's very rare that both of them actually are performing and supporting the index. So right now we have seen that the ratio of Nifty Bank to Nifty IT has reached to a level wherein there could be some outperformance by Nifty IT in the short term. So the short term bounce which I am expecting in the market, Nandita, could be led by Nifty IT, and the medium term downturn which we are expecting could be led by Nifty Bank, is what I'm trying to say.
Okay, great. A short-term bounce can be expected on the back of the Nifty IT index, but medium-term downside would be more tilted from or would come from the Nifty Bank index. Okay, got that. But I was talking about one high flyer today, Godfrey Phillips. Good rally there, great numbers. Stock has doubled in the last 6 months, and today as well it hit a fresh 52-week high. Is it really near the top, or is it a good time to ride this rally or chase momentum, so to say?
I would say, see, the momentum is still strong, Nandita. I mean, the stock did consolidate, and the momentum had actually weakened out here, and the stock was consolidating in a very narrow range. But it's still, I mean, it's not a complete breakout. It's always better to have a follow-up buying. So today it did provide a breakout, but I think that if it provides a follow-up beyond the levels of say 9900 or 9950, it would be then considered to be a further breakout of a consolidating range of say almost 8000 to 1900, and that would be around approximately 2000 points. You can see it as 2000 points, you can see it as 20%, and beyond 9900 or 9950, I mean the stock can rally as high as 12,000 levels as well. So obviously, when these kind of breakouts happen, basically the risk reward is always favorable on the trader side, because you have a good stop loss level or an exit level as well, both on the upside as well as lower side. So whenever there is a range form, Nandita, you have an exit point that, okay, below this, if it falls back, you have that exit point. So that would be say 9500 now, which would be around say 400 points. And on the upside, you might eye for around say 11.5 to 12,000, which would be 15 to 20%. So downside would be 4%, upside could be as high as 15 to 20%. The risk reward, as I said, would always be favoring the trader. It could be as high as 1:4 or 1:5.
Got that. I want to get in your thoughts on BSC as well. Some source-based news that we have from our channel, sister channel, CNBC TV 18. They've reported that, of course, Finance Ministry and SEBI may be in talks to reduce the volatility in the options market by increasing the cash market volume and reducing the options market volume. I think that's one reason why BSE tanked somewhere around 5% today, and generally the capital market plays under pressure. For BSE in particular, do you see more downside because the stock has been in a downtrend?
I think so, yes. I mean, see, this kind of a news is definitely not very positive for the exchange like BSE, who has seen this kind of a dream run, has provided phenomenal returns to the investors. And that was mainly due to the kind of activity or maybe turnover, increase in market share which BSE had actually uh, gained in the derivative segment. You know, I mean, if that, I mean, there are already many steps taken by the regulator, which have been definitely in the favor of the retail traders. SEBI wants to protect the interest of the retail traders, and I'm sure anyone would want that. I think that whatever SEBI is doing is definitely good for the retail investors or traders. But in doing so, I'm sure the hit because it has hurt many discount brokers as far as I remember because of the cut in rebates and thereafter increase in margins, then decrease in or maybe taking away the benefit of the calendar spread, increasing the margins the day before the expiry. All of these measures which SEBI took and it took place until for 3 to 4 months, wherein it also shut down the weekly expiry for Fin Nifty, Midcap Nifty, BSE Bank X, Bank Nifty. So that has been done, and because of which we've seen the volumes coming down already. But there was this hope that Sensex weekly and Nifty weekly are there, and somehow the volumes might be shared by these two indices. But then I think if weekly goes away, it would definitely be a big hit, not only for BSE. Nandita, it would be for NSE profitability also. I think it has already seen that NSE. So I think that is done before the NSE IPO, I think it would hit the valuation of NSE IPO as well. And it would be fair doing so because it should not be hurting the sentiment of the fresh investors into the NSE IPO through IPO. So I think it's a fair thing. I mean, I am with regulators if they are doing this kind of a thing, and I hope that it helps to achieve the mission of theirs of what we are trying to do.
Okay, that's the view on BSC. But I was talking about some of these power OEMs also, the likes of Suzlon and BHEL. UBS, in fact, has initiated coverage with buy rating, and the target prices will flash on your screens. But the stocks have been in a downtrend. But last 5 days, we've seen a pickup in traction for both the stocks. Both the stocks have given positive returns over the last 5 sessions. Would you say that the risk reward is looking favorable for some of these names after the recent correction?
I think yes, I mean BHEL definitely would be commenting that there has been a lot of long unwinding and the F&O activity has in the future segment has Nandita reached to quite a lower level as far as BSE is concerned. BHEL is concerned. I mean, when I look at the futures activity, it has fallen to as low as 2020. So I think with such kind of a low open interest. And after the price having corrected so much, there is always a good chance to create long positions in this stock. So from the medium to long term perspective, short term, as I said, the volatility will be there, Nandita. But from the medium to long term perspective, I think yes, BHL has a fair chance taking off his previous highs of 340 and maybe inch towards 400. So from a medium to long term perspective, I am bullish on BHL, relatively better than Suzlon.
Okay, BHEL is better poised on the charts vis-a-vis a Suzlon. What are your thoughts on the OMC pack? Of course, there's a lot happening, and with US, in fact, Trump warning, nations that if you continue importing crude from Russia, you will face higher tariffs. If that happens, if there is a stoppage of crude imports from Russia, of course, that will be negative for for OMCs in particular. Today also we saw some reaction on OMC stocks, but on the charts, how are they poised?
Let's see, Nandita, you rightly said, I mean, the Trump tariff, penalty, and the statements which are coming right now as against India trade with the US as well as India trade with other countries, that is a negative thing and having a negative impact on the OMCs. That is point one. Point two is also that the currency depreciation is also hurting them because definitely, their margins are basically hit by both currency depreciation as well as, this kind of statements from, President Trump. But I don't think that India government would definitely stop the business with Russia, or maybe from wherever they are sourcing the cheap crude. So I mean, if the crude oil prices overall are going up, that's affecting them. But otherwise, I think it's short term in nature, not the medium to long term things would be thereafter sorted once the deal is done, and it would be positive. But for short term, definitely is negative, and hence one should be avoiding the leverage position in the OMCs till we conclude a deal with US.
Okay, avoiding some of these OMCs, that's the call. But a couple of more stocks then. Triveni Turbine is one stock that was among the laggards today. Subdued numbers. Revenues were down 20% on a year-on-year basis. Both domestic and export segments saw weakness. There's a lot of weakness because of geopolitical tensions as well. But the management has said that they are confident of maintaining the current growth, trajectory. But after today's, down move, in fact, the sharp sell-off that we saw on this stock, how would you be looking at it?
As long as the non-FM stocks, I have to look at it from the bond point of view. And yes, I think the short-term trend momentum is not in favor of the bulls. Daily indicators to monthly indicators all are in sell, and I think the Triveni Turbine can further see some correction until the levels of initially 400 and maybe below that 380 as well. But then 400 levels can't be ruled out, Nandita. So the short-term trend seems to be negative. On the upside, 600 is a very critical resistance. So until 600 levels are not taken off, the trend out here is negative.
Okay, trend is looking negative. But last stock before I come to your recommendations, Max Health. This is one stock that's on my radar because it's ended high by about 1.5% in a weakish market. Nuvama has come out with a report wherein it says that there are chances that Max Health may join Nifty in the September review. Of course, the review happens twice a year, and the inclusion of Max Health on the index is likely to see passive inflows of approximately $420 million or thereabouts. We saw good traction in the stock today. Last month or so, it saw some bit of selling pressure, but what would you say? Would you say that it's coming back in favor?
Overall, we've seen a good long build-up in this stock, Nandita, since its entry in the FNO. We did see some long unwinding happening in this stock, but then overall, the trend has been positive. And in this up move, what we also noticed is that the high top high bottom formation is what we have seen has been intact. So I think in the short term, 1200 is a very critical support. Until those levels are held, the overall trend should be positive. The levels which one can look out for in the near term could be as high as 1350, and beyond 1350, one can also look out for the levels of 1420 as well. So 1350 short term, 1420 beyond that are the levels one can look out for as far as Max Health is concerned.
Okay, that's about Max Health. But we have a big event coming up tomorrow. How according to you would the markets take a 25 basis point rate cut, and how would they really react to a dovish pause? I mean, any thoughts there?
I mean, see, if at all, there is definitely a 25% rate cut, which I doubt. But if it happens, there would be a short covering for sure. Short covering for sure. Because see, we have, Nandita, seen a good shorts build up in the index, and FII short positions are to their one of the lowest levels. I mean, this kind of levels which we had seen in March 23, and we all know that once this reversal happens and when short covering starts, there is a very high probability of market thereafter bouncing back quite sharply and witnessing a huge rally as well. So everyone is waiting for that. A trigger is awaited. Which trigger could lead to that? I don't know. And could it be a deal with the US? Or could it be a withdrawal of statement by Donald Trump? And it can be a good negotiation between the two countries, or uh, could it be RBI policy? I doubt, because I think as of now, rather than RBI policy, the deal with the Trump and the geopolitical, not geopolitical exactly, but the tariff war is, Trump tariff trade. As of now, the fears of that are more relative to RBI monetary policy. But then definitely a short-term bounce back can't be ruled out on account of short covering. If at all there is a 25 bips cut. If not, we know that in future it will happen, but it could be a non-event thereafter.
Okay, got your point. I guess people are waiting for the taco trade to play out if Trump really withdraws his statements. But before I let you go, any recommendations with a 1 to 2 day perspective or a 1 to 2 week perspective?
Definitely, Nandita. One would be a buy recommendation. I've got two buy recommendations. Why two buy recommendations? As I said, this is a sixth week and I'm expecting a positive weekly close. So in anticipation of that, I have two buy recommendations. For one is on TVS Motors. One can go long on this. I mean, it's trading around the levels of approximately 2984 in spot. So 2984 is one where one can go long on TVS Motors. One can look out for a target of say 3050, 3100, placing a stop loss below 2940 on a closing basis stop loss. And why TVS Motors? Because Nandita, it has been trending higher. Technically, we have seen a good bullish crossover. The stock has been forming high tops, high bottom with long build up as well. So that's very critical. And the monthly sales figure has been positive. It's just Bajaj Auto among the two wheelers. We didn't provide that great numbers. Else, Hero and TVS have really shown good performance. So I think TVS has been an outperformer. It has been a leader, and it would continue to be so for this month as well. So that's why I have TVS Motors as a buy call. And second would be on LTI Mindtree. Why? Because as I said, if in the short term IT bounces back and helps Nifty to bounce back. LTI Mindtree is one stock where you can see some short covering. In fact, technically it has formed that nice falling wedge pattern as well with the bullish divergence on the RV charts, followed by short covering anticipation. So I think 52 20, 52, 50 is where one can look out for on LTI Mindtree. It has closed somewhere around the levels of 50 and 40. Placing a stop loss below 1500, one can go long on LTI Mindtree as well.
Okay, LTI Mindtree and TVS Motor, two recommendations coming in from Jay. With that, Jay, would like to thank you for taking out time and joining in this afternoon. Let's hope there's some reason to cheer tomorrow. Today was a down day, of course, and as you mentioned, that we could expect a positive close this week after 5 consecutive weeks of losses on the Lal Street. But let's hope so, and I've got my fingers crossed. Thanks a lot, and I'll see you soon, Jay. We'll touch base again. And for our viewers, thank you for watching.
Pleasure being on your show.
Sure. Thank you. So yes, we'll see you tomorrow. To our viewers, 9 a.m. That's when you log in or join us on Moneycontrol. And of course, tomorrow is the RBI decision day as well. We'll get you coverage from 10 a.m. on that. Completely timed out. Thank you for tuning in. Have a great evening, and I'll see you tomorrow. Thank you.